Well, welcome and thank you for attending this presentation. My name is John Cliff and I have been a mortgage advisor for the past 15 years based out of Edmonton, Alberta. I wanted to share with you some of the insights I've picked up along the way regarding what I believe is a real opportunity for parents to help teach their children financial literacy and prepare them for their own financial futures. While financial literacy may sound a little technical, it's not really. It's more like jumping into a swimming pool. It's a bit cold at first, but you get used to it after a while. This presentation is designed to flow from when our kids are quite young through the teen years until, as young adults, they're thinking of finding their own homes and starting their own families. Feel free to post any questions on the links below, and I'll be able to respond based on my own personal experience. So, with that, let's get started. Well, we don't need to look very far these days to see that a lot of Albertans are facing some sort of financial pressure. Many of us are just trying to make ends meet while maybe putting a little bit away for our future retirement. But what studies are showing is that parents are dipping into their own retirement nest eggs by assisting their adult age children financially. But what if instead of just giving them money, we gave them a financial education instead to help them become more independent? This presentation is designed to provide you with some ideas and tools to help get you started down that road. We'll introduce topics for kids at a young age through the teen years until at the time they, well, hopefully, find their own homes. Why me? Why do I have to do this? Well, as parents, we're still the primary educators when it comes to teaching our children about finances. And many of us avoid talking to our kids about money because, well, we lack the confidence in how we've handled our own finances. However, there is one thing that we have that our children don't, and that's experience. So even if our own finances are less than ideal, we can still be a positive role model going forward. Well, like other taboo topics, money is something that our kids are going to hear about anyways. They might hear from a friend that wealthy people are, they're just lucky. Well, as parents, we can provide more accurate information than that. We can introduce ideas, we can spark interest, and help empower our kids to take control of their own financial lives. Well, what is money anyway? Before there was money, people used to barter with each other to pay for things. Maybe a dozen eggs got you a loaf of bread, while 10 chickens got you a pig. But these things aren't really easy to carry around. You ask your child, could you carry a cow or several chickens in your pocket? Well, of course not. They're also not easy to divide. I mean, how could you trade part of a cow for a loaf of bread? So eventually, cash money was invented to make transactions simpler. Well, now that we've invented cash, of course, nobody uses it anymore. So, our kids are always seeing us buying stuff, but they never see any cash. We use credit cards, we use debit cards, PayPal, cell phones, you name it. Our kids need to understand this is not free money. We actually have to pay back these electrons with real money we have earned from our jobs. So, of course, most of us need a job so we can earn a living, or what's called income. Well, once our kids understand that you have to earn money, a lot of times they want to see how they can get in on the action too. How could they earn some of their own money? Well, for now, you can discuss an allowance or doing specific jobs around the house or the yard to earn a little bit of money. And kids also get money for birthdays and other holidays. It's really exciting for them to discover all the ways they can make a little cash. And what's really interesting is once they have their own money, well, guess what? They respect their own money a lot more than they respect our money. That game that they just really have to have when it's our money, but when it's their money, well, maybe not so much. So it's important to encourage them to think about earning their own money. Even from a very early age, kids wonder about what they might do for a living. So you could have a conversation with them. You could ask them what are their favorite subjects at school? Why? Can you think of any jobs in those subjects? What are your favorite hobbies? Can you think of a way to turn your hobby into a job? An allowance is a great tool. Our kids can practice saving and making good spending choices. One thing you can do is make a habit of paying them on a regular basis, almost like a real paycheck. And whether this is going to be just pocket money or for doing chores, that's really up to you as a parent. I'm not going to get into parenting choices here, but I would just say whichever way you do go, make sure you're consistent. So if the allowance is just for pocket money, don't withhold it because they didn't make their bed. And if the allowance is for doing specific chore, make sure they complete the work before they get paid. Well, you can't always get what you want, they say. This is a really important topic for you to discuss with your children, and it's the difference between wants and needs. So, needs are things that we need to survive, and wants are things that we would like to have. So, examples of needs are things like food, shelter, clothing, medical care, transportation, utilities. And examples of wants are things like toys or video games, electronics, books, jewelry, movies. Of course, the list is endless, as we all know. The point is, with limited money, we have to understand the difference between needs and wants so we can spend our money wisely. So, just as an experiment, you could ask your child, what would happen if we spent our entire paychecks on video games one week and left nothing for food? Of course, they might seem to get excited that they're going to get a whole bunch of new video games. But even though they may really want those games, we have to pay for our needs first and then buy the things we want. So when you're grocery shopping with your child, it can be a real good teaching opportunity. You could get them to point out items that they think are needs and other items that they think are wants. At this stage, kids don't need to know everything that goes into the budget. They just need to understand that there is a finite supply of money to pay for our needs and wants. Here's an example of a simple picture you could show them, or if they're young, they may even want to color a picture like this. You can see that the majority of our income is going towards housing and food and clothing, and then there's a little bit left over for optional items or wants. Choices, choices, choices. Let's say your child got $5 to spend at the dollar store. You could ask them, what would you like, the toy frog or the toy lion? Okay, this seems like a simple choice, but getting the kids to make them is great practice. You keep emphasizing the difference between needs and wants, and that money is limited and we have to make choices. I read somewhere if you talk to yourself, you're not actually crazy, you're a genius. So, next time you're out shopping with your child, start talking to yourself and let them hear you. Ask questions like, do I really need to buy this now? Would this cost less somewhere else? Maybe I can borrow it from the library from a friend. You can point out and say, this cereal is $8 and this one's only $5. They both look the same. Which one do you think we should buy? If our kids see us putting a lot of thought into each spending choice, they'll be more likely to do the same for their own choices. By age 4, most kids associate coins in their piggy bank with this abstract concept of saving. But it's so hard for our kids to wait before buying something they want. But this is a really important lesson for them to learn. If your child really wants something but is short on cash, explain that they can save their money in a safe place, such as a piggy bank, until they've saved up enough. You can even create a mini budget with them for the purchase and figure out, okay, how much do you have saved already? How much will the item cost? How much do you expect to earn each week? And therefore, how long will it take to save? And putting this plan in writing can be really motivational. You could use a calendar to track their weekly progress and put a big red circle on the finish line. It's exciting for everyone as that finish line approaches, but it's really important to resist the temptation to step in and bail out your child for those last few dollars. Interestingly, though, saving over this period of time can help kids actually weed out some of their wants. They may decide that game's not so important after all. So waiting to make a purchase is an excellent way to avoid impulse buying. Oh, by the way, that works for grown-ups too. Well, sooner or later, our kids are going to outgrow their piggy banks. But luckily, many banks have free savings accounts designed specifically for kids. And the tech-savvy kids, they love these new apps. You can transfer money between accounts. You can email them their allowance or maybe their birthday money. And then, by using their debit cards, they can actually track their own spending habits. I'd suggest take your kids to a local bank branch and see for themselves what goes on. They can meet the staff, they can ask some questions. Hey, they can even check out the vault. And a lot of bank branches actually host kids' days as well. Okay, to summarize what we've learned so far about our very young children, it is an exciting topic for them. Many of them are eager to learn about earning, spending, and saving money, even at a very young age. Our kids are ready to learn the basic concepts we've talked about so far. What money is, needs versus wants, spending choices, and savings goals. The more we're able to take advantage of teachable moments, like at the grocery store, the easier it will be for our kids to grow up to be financially responsible. So as our kids grow older and become teenagers, we can start to explain some of the earlier concepts in a little bit more detail. One theory in life is that there's two piles of money. There's the in pile and the out pile. So the in pile is basically any income. So that's money that's coming in. So allowances, gifts, jobs, etc. And the out pile, of course, is your expenses. These are funds that are going out to buy the things that we need and that we want. So now that they understand the relationship between income and expenses, we can introduce the concept of debt. A very important concept is that income must exceed your expenses in order to avoid debt. If your income is greater than your expenses, then that's great. You'll have money left over. You can save, spend, share, invest. But if your expenses exceed your income, you will have to make some changes in order to avoid debt. There are three basic choices. You can make more money, you can spend less money, or some combination of the two. Once we've introduced the concept of debt, we can now move on to what are called assets and liabilities. Assets are simply things that you own, and liabilities are those things that you owe. And net worth is simply the difference between the two. So your child might say, those Johnsons are so rich, they live in a big house, they drive fancy cars, they go on all those vacations, they have all the cool toys. But looks can be deceiving.
I'm Stanley Johnson. I've got a great family. I've got a 4-bedroom house in a great community. Like my car? It's new. I even belong to the local golf club. How do I do it? I'm in debt up to my eyeballs. I can barely pay my finance charges. Somebody help me.
Oh, I love Stanley Johnson. Well, we all know we live in a world of instant gratification. And, when our teenagers have money, the inclination is, I got to spend it on something right now. Sometimes we even innocently ask, hey, what are you going to spend your birthday money on? This can lead them to think that they're actually supposed to spend it. But there are other options. Of course, they can spend, purchasing things that they want or need. But they could also save. They could set aside money for the future. They could share. Maybe they want to donate to charity. They can also invest and try to get their money to grow. So one idea with what to do with their money is talk about setting up some predetermined percentages. So for example, maybe they spend 40% of it and they save 50% of it and they share 10% of it. Hey, you can walk them through your own paycheck. Maybe out of every paycheck, the family's needs and wants take up 70%. You put aside 10% for savings, 10% for sharing, and 10% for investing. So now that our teens understand the concept of savings, we could talk about short versus long-term savings goals. A short-term goal might be for a new video game or cell phone or some sports activity. A longer-term goal would be for things like university tuition or buying a car. So let's say, for example, they're saving up for a new $800 mountain bike. As before with the calendar, they can see the plan laid out in writing. It will really help. So here's an example of a tool we can use to help our kids save up for their mountain bike. Again, building on the concept from before, we've got a starting balance of $200, and we can see week by week we've got some steady income, for example, the allowance and the dog walking and the yard work, and some is variable such as gifts or pet sitting. But we can see as each week grows and grows and grows, eventually by week 17, they'll have enough money to purchase their mountain bike. These spreadsheets are very useful tools, and even if you don't know how to build one, there are plenty available online that you can simply download. So while your child is going along with their savings plan for their mountain bike, it's important to keep reinforcing that they can also reduce spending in addition to saving. So whenever they're about to buy something, try to get them to ask themselves, do I really need this now? Is it more important than some of my other wants? Could I borrow it instead? Can I just wait 2 weeks and see if it's still important to me? This one habit can help your child avoid impulse buys and unnecessary purchases. Imagine if you had asked yourself these questions before every purchase you ever made. Well, we've all heard that money doesn't grow on trees, but it can grow. It's called interest. You can either pay interest or earn interest. Even if our kids are too young to have their own credit card, we can still show them how interest affects us. For example, we could show them a credit card statement and point out how long it's going to take to pay off the balance if we just use the minimum monthly payment. Or you could show them a mortgage amortization table so they can see how much interest we will pay by the time our home is paid for. Well, let's talk about earning interest. That's far more exciting than paying interest. So, would you rather have $1 million right now or 1 penny that doubles every day for the next 28 days? Well, it's kind of a trick question, but it does introduce the concept of compounding. So you can see here in week 1, we start off with 1 penny, and on the next day it doubles, then it doubles again, and doubles and doubles and doubles, and keeps doubling, and guess what? By the end of 28 days, you would have had more than $1 million. Okay, well that was kind of a silly example. I mean, who can carry around 325,000 kilograms worth of pennies? So this is a more realistic example. So assume you have $1,000 to put in the bank today, and it will stay there until you turn 50 years old. Well, of course, if you start when you're 50, the $1,000 is still going to be $1,000. But if you start when you're 10 and you're earning, let's say, 5% interest, your money will grow by over 7 times. And if you start when you're 25, it'll grow by almost 3.5 times. So you can see from this that the longer amount of time you have, the greater the possibility that you'll earn more and more interest. So whenever you're saving or investing like this, time is your friend. Now that our kids see the possibilities for earning interest and growing money, they may start to think about some entrepreneurial activities that they can undertake to earn some extra income. They could start a business. Now, the business can make a profit if its earnings exceed expenses, but it will operate at a loss if the expenses exceed their earnings. So, for example, your teen may decide to start a lawn mowing business. So they take a risk and they lay out $500 for a lawnmower and some equipment and gasoline. and they start to mow some lawns. And if they earn less than $500 mowing lawns, they've suffered a loss. But if they earn more than $500 mowing lawns, then they get to reap the rewards. So profit is when your earnings are greater than your expenses, and loss is when your expenses are greater than your earnings. Now, there's another place your teen may be interested in terms of risk and reward in businesses. It's called the stock market. And this is a place where people buy and sell stocks and other financial products. You can explain that when people buy a stock, all they're really doing is they're buying a little piece of that company. So let's say your kid comes into your office saying, "Hey, Dad, you got to buy some Disney. That new Star Wars movie's huge. The price is going to soar." You know what? That's great. They're showing an interest, and here's what you can do. So you can pop on the internet and pull up a stock chart of Disney and talk to your child about it. So what this is showing is we've got time down here. As time goes on, the stock price fluctuates up and down. So if you buy high and sell low, you lose money. If you buy low and sell high, you earn money. And down here at the bottom is the volume of trades. So you can see there's a big spike right here when this huge drop occurred. So this is not really for the faint of heart, but it's an excellent opportunity to talk to your child about the stock market and the risks and rewards, potential rewards involved in playing the stock market. Now, this actual graph reminds me of kind of a roller coaster ride, don't you think? So I'd like to explore more about entrepreneurs, or TREPs as the kids call them today. You know, our children already have many of the entrepreneurial traits. They're creative, ambitious. We all know they're natural negotiators. And they're excited to learn new things. And we can all see the economy and the job markets, they're changing before our very eyes. We have no idea what the future job markets will hold. So we should encourage our kids to think about what they like, whether it could be turned into a business somehow. So by encouraging your kids to do something with all that energy and creativity can help foster their natural trepping spirit. And really, there is no limit to this. So for example, let's say your teen likes quadcopters and they really enjoy doing video editing, and they have, kind of an interest in real estate. Well, here's an example of a couple young entrepreneurs and what they've done.
Well, we've been doing the real estate videos for about a year now. We started off with a GoPro, and then we went to a new DSLR. We built a couple homemade jibs and sliders, which totally didn't really work. So we ended up buying real ones, and now we officially have the next toy in the toy box, and it all comes in this sweet little black box. We are taking real estate videos to the next level. It's gonna be insane.
Oh, the dreaded B word. Please don't make me budget. Well, actually, budgets are incredibly useful tools, but they're often avoided. So as our teens start working and taking on more financial responsibility, budgeting becomes more and more important. The good news is budgets are really simple to create and use. Budgets can be a real eye-opener for your teen. They reinforce the fact that money is limited and we have to make spending choices. So here's an example of the dreaded budget. It's actually a very useful tool because what it does is it gets your kids to start thinking about, where's the money coming in from? Where's my income coming from? Maybe I have some wages, some tips, the occasional gift, and if they're lucky, you're still giving them an allowance. So they can actually think about where the money's coming from, and they can see month by month how much money they've got coming in. Then they look at, okay, where's the money going to? What are my expenses? Maybe they have a car loan with some insurance and gas and maintenance, and they like to go out with their friends, so they have an entertainment budget, food, clothing, haircuts, savings, etc., cell phone. So they get an idea of where is the money coming from, where is it going, and am I going to be in the red or am I going to be in the black? So it's a very useful tool. They can lay it out right in front of their own eyes, and they can see, for example, here in January, they're going to be in the hole $138. So they could either take that on as debt, or they could start to look at, maybe I can reduce some of this. Maybe I don't really need to buy $100 worth of clothes. Maybe I could just buy $50 worth of clothes. Or maybe I won't go out as much during the month. Or, maybe I'll put in some extra time and work and get some more wages. So they can try to balance their budget. You can see here in March, you're a little bit in the black. And again, in June, they're a little bit in the black. So with budgeting, it's not so much about which tool you use, whether it's an online tool, such as the ones provided by banks or your credit card company, or whether you make your own. The real idea is to keep thinking on a regular basis, where's the money going to come from, and where is it going, and am I going to be in the red or the black at the end of the day? So at this stage of their lives, our teens may actually have their own credit cards. And as we saw from the previous budget, some months that's going to come in handy when they're a little bit in the red. And to a lot of teens, that's kind of the end of the story as far as credit goes. But it turns out there's a whole other world of credit, and it's called the credit bureau system. This is a system where various lenders, credit card companies, car loan companies, cell phone companies, mortgage companies, they report your activities. And really what they're doing is letting other lenders know whether or not you pay your bills on time. So by establishing a good credit history, you'll establish a good credit score. And these scores can help you in a number of ways. So they could help your teen get better interest rates on credit cards and loans. It could help them when they go to rent an apartment, because most landlords will do a credit check. It could help them qualify for a car loan. In fact, the insurance companies for cars provide better rates if you have a higher credit rating. You can avoid security deposits on utilities. It can help you borrow money, for example, with a mortgage. A lot of them actually have affinity points programs now where you can earn points to take vacations. And they give you spending habits as well. So they'll give you a report at the end of every month tracking your spending, which can actually help you create your own budgets. So it's really important to think about starting early. The earlier the better. Get an established credit rating for your teen. Oh, kids, they grow up so fast and they move out so slow. Well, your older child may be ready to move out and find an apartment or house to call home. So, do they rent or buy a place to live? Well, of course it depends. But this is a great opportunity for you to guide them through this very important time. Well, renting is really for people who maybe they're not ready to settle down quite yet. Maybe they'll only be living in an area temporarily, for example, going to university, or maybe they're unable to or unwilling to obtain a mortgage. But it's great to have a budget for rental because this is really going to help you and guide your search. Clearly, with a small rental budget, you can't be living in a nice penthouse suite in downtown Edmonton. So it's really important to Come up with a budget first, and that'll help you guide your search. There are other things to consider, such as amenities. Are they going to be close by to grocery stores and movie theaters? What's the commute like between where they work and where they live? Are pets allowed? What about roommates? So there's a whole host of decisions to make. And again, this is a great time to spend with your child to go through these questions and issues at this really important time. So the alternative to renting would be to buy a place. And unless you've won the lottery recently, most of the people I know that are buying a home require a mortgage. Unfortunately, many young adults are unable to qualify on their own, so they need the help of their parents to co-sign on the mortgage. But this option you really need to consider carefully, because anybody who's on the mortgage application is going to be fully responsible for the entire amount of debt. And as we talked about earlier with the credit bureau system, all of the reporting will go on everybody's bureau who's on the mortgage application. But as a mortgage advisor, I can certainly offer to help you and your family navigate this process and help you achieve your goal of home ownership. So in summary, teaching kids is an ongoing process. You could start with a real simple conversation, maybe in the grocery store about the difference between a want and a need, and eventually over time they're going to develop a deeper understanding. We can use these teachable moments to help them practice and share our own experiences. Your kids and you'll have a couple of those aha moments along the way where an idea finally makes sense. But the more you talk about financial responsibility, the better the chance your child will become a financially responsible adult. I'd like to thank you again for attending this presentation, and please let me know if you have any questions about anything. Thank you again.